Hi guys, welcome to the weekly review video. This is a video that will be covering the week starting on Monday, the 20th of July and ending on 24th of July. Generally speaking, a short week for me in terms of trading. We had a fantastic two-day event, bootcamp seminar on Thursday and Friday. Lots of students lots of new people that joined us in this intensive two-day course where we review a lot of our methodology, and we went from more basic stuff to a lot more complicated stuff, and we really had a good time. Um, but generally speaking, so I will review a few of the trades taken at the beginning of the week. A week that's been punctuated by two main events in my book. The first event being the final resolution, positive resolution in Europe of the EU meeting, and the voting of the massive economic package that's going to be coming to help most of the EU countries, and mostly the Mediterranean countries like Italy, Spain, Greece to some extent, the countries that have been that will need a lot of support and a lot of grants, and this has continued basically landed some continued strength to the euro against the dollar. Um, at the academy, we've been playing at the for the past quite few weeks now. The long position on the euro dollar, long the euro, short the dollar. This also has definitely pushed and helped a little bit as well on a long position in gold. We'll review also my position in gold and where I think we're coming from. We're going from there. And the other second event that's been important is also a renewed kind of conflictual situation between U.S. and China. Generally speaking, a conflictual position of most of the countries against China these days. I mean, we've seen a lot of like acrimony between the UK and China, US versus China as well, with this the whole uh, the whole situation with the Chinese embassy in Houston, and I feel that the market has not been pricing really any eventuality of something going maybe going wrong, going further. I guess that's probably the market has been so used now to this bad exchange between U.S. and China that it's kind of become like kind of natural. But I do feel we've seen some kind of heaviness in the past few days in the market, and it's been the second week in a row that we've seen the Nasdaq ending the week on the red note. Uh, the S&P Russell 2000 also ending the week on a red note only for this week. But still, I feel that start we start seeing some kind of heaviness in the market, a lack of volume as well on the way upside. So this pushes me to be a bit more cautious. Again, I still believe that the overall trend still massively on the upside, but we've reached important technical points. Definitely on the Nasdaq, this whole rally since the end of March has been fueled by tech stocks and bio stocks. A lot of these stocks being also listed on the Nasdaq. So let's jump and have a quick look at the indices to start with. All right, so we got right here the SPY ETF replicates the S&P 500. Let me just close down the webcam so we can have a better look, full view on the of the charts. So, like I said, right now looking at the weekly picture on the S&P, we had managed to basically go just above the high of a few weeks ago. The high was 323.41, and we had managed this week to go slightly over that, but we've got like this sort of hammer, a candlestick pattern that's a, that's happened. Nothing really, so alarming. I mean, again, let's have a look at the daily chart. And on our daily chart, we see that we still have the market way, trading up, making higher lows and slightly higher highs so far. We haven't been able to reach out to the all-time high on the S&P yet. We're still trading above the main moving averages, but I still feel that we get a lot of conviction and a lot of a lack of volume on the S&P. Nothing that really basically is dramatically alarming, but just saying that we need to stay really cautious because this is going to be, if we manage this week to gap down and we can't maintain these levels of support all around the moving average 20 and basically around 317, 316 on the SPY, I would say that we're probably going to see some more downside aiming at first levels around 310 and then later on ultimately around 300. I don't think that we're going to see that in 1 week. If we see that, if we can't basically hold these sort of levels that I was just telling you about, moving average 20 and around this level, again 316, we might definitely see more downside coming up this coming week. Now let's look at Triple Q, the ETF replicating the Nasdaq. And again, on the daily chart, I found this chart a lot more interesting. This is the high that we've had, the all-time high previously that we achieved in February, end of February. And we have passed this all-time high very easily. Which date was that? It was on the beginning of June. And since then, the market has been definitely trending very strongly, lots of momentum. The market establishing higher lows and higher highs. It's the first kind of time that we haven't been able to match the last high that we've established on the 13th of July. And we have this candle, red candle that happened in some decent volume. The market tried to find this week some kind of bounce on moving average 10, but then we had a big red day on Thursday. On Friday, our levels of support that we've had with the Academy was anywhere between like 248 to 51. We held this market this support at 251 spot 32. Our level was 251 spot 15, and the market basically managed to bounce back from that. But I would say that in the coming week, if we can't pass quite quickly this level at 260, basically this level here above the moving average 10, I would probably think that the guys are going to start coming back and playing the short side of things. On the 60-minute bar chart of the Nasdaq, right now we've managed to also come up into this area again. 251 around was the big support. We managed to bounce back. On top of that were the convergence of moving average 200 on the 60 minutes, which was also landing a lot of support. So, but again, if we can't manage to bounce back and really with nice volume and momentum above this area here, around 259, 260, I think that the guys are really going to basically try to short it again, short that bounce, and aiming again a retest of the 251, and then we'll see. So right now we're kind of basically in no man's land, and I'd say that the range is going to be 251, 260, roughly 261. I'd say this 10 points range on the Nasdaq. The trend still still positive, but the fact that we haven't been able to manage a new high, the fact that we're trading below the moving average 20 doesn't inspire me super confidence at this stage, I would say. And I would say that probably the odds of having a dead cat bounce to 260 and then trying to retest the lows and even going lower than that towards this area around 245, 240.37, within that area, I think the odds are probably more important at this stage. But we'll see. We'll let the market tell us what he wants to tell us. And let's have a look at the Russell 2000. So the Russell 2000 is the index that looks at small cap. Also, looking at these three indices gives us a pretty good idea, an overall picture of the US market at this stage. So same kind of picture on the small cap index. Haven't been able, I mean, definitely the small cap haven't been able to go back to the all-time high that we reached back in February here. And let's just make it a bit larger. And the high that we've established again on the same week, beginning of June, we haven't been able to trade back to that high of beginning of June. Nothing crazy happening on the Russell 2000 yet, but I just feel this area of consolidation, the market not doing the decrease of the volume, and the overall picture that we just described on the triple Q on the Nasdaq might give us also higher probabilities to go and retest the support area of around 138 on the IWM ETF, which basically replicates Russell 2000. So generally speaking, I think we'll have to see how we open up on the futures on Monday, see what the market tells us, and if we open with a gap down, or maybe see if we are able to retest some of the highs. We'll see if we can get a continuation pattern on definitely on the triple Q next week. Now looking, I was talking about also the move that we've seen on the euro. So let's have a look also the movement that we've seen on the euro, and we kind of got involved ourselves on the break. Just basically go on the daily would be easier. We kind of got involved on the break that we had seen at the beginning of June, around that level. You see these levels of resistance around 110.20. That's the levels where we started basically coming back in long euro, short dollar. The first level of resistance that we had on our book was around 112.50, and the next big level was where we traded here around 114. So we had position that we took off along the way, around 12.50, 114, and rebuilt some position again on the pullback to moving average 20 when we kind of like got sandwiched between moving average 20 and moving average 50, and started basically coming back around the 113, just above 113. Now, the risk ratio was also quite decent because we were retesting around the 114, 114 and a half area. And since then, and probably helped and fueled by the voting of this huge emergency economic package from the EU members, I think the euro has shown some vote of confidence. And the fact that we've seen, even though the negotiations have been tough with the so-called frugal countries, the northern countries, at the end of the day, they still managed to basically come up with a package. They still managed to kind of save off the face of the European Union and say that, yeah, we're here to help our weakest partners, the guys that have been really affected by the COVID crisis, talking about Italy, talking about Spain, and to some extent other countries like Greece. But I think that this vote of confidence, just politically speaking, showed that there was still something to talk about in the union. Whereas a few weeks ago, people might have talked, we're going to see again the risk of a Brexit à la Italienne, or same thing for Spain. The situation was really saved, and this is basically also shown and represented by this huge move that we're seeing right now, the huge strength that we see in the euro against the dollar. At this stage, next levels really that are going to be important to watch are going to be around 118, 118 and a half. This is basically the next big level. Let me mark that level for you here. That's the next big level that we're gonna probably encounter. And so to be watch closely for those of you trading some of the currencies. Obviously, the weakness in the dollar has also kind of lending some strength on the gold position. And if we look at the market, we've had quite an incredible week. We managed to basically, from the moment where we saw a couple, 3 weeks ago to be able to break just above 1800. Now we've seen a huge increase of almost $100 on gold. For those of you who follow me for a while, you know that I've been very much involved in gold and since the beginning of the year. Uh, where I started basically going back into gold all above the 1480, 1490 level. And I've been holding a long swing trade on this thing. Took obviously some partial profits along the way, reinforced on some of the weakness that we had seen on those days when I had a big pullback as well, and some technical level conversions of price supports and our moving averages. But generally speaking, I've been holding the position for a while now, and haven't reinforced the position lately. This The market kind of like hit a level of consolidation from mid-April. The market was not doing much, and just basically on the week of towards the end of June, we started like seeing some movement again, and which regained confidence. As I've posted on some of our social media, the levels that I had, the big level that I had in my book for started unloading some position and taking some partial profits were all around the 1850, 1900 area, which basically this is what I did this week. I still believe that the big level on gold spot price is going to be here around 1920, and that's the reason why I've been taking some money off the table. Um, I don't know what's up next, whether we're going to be able to break that level and in that case go probably a lot higher. But at this stage, I'd rather basically take money off the table just and see revisit whether we're going to be seeing a strong breakout on the upside, or whether we're going to see which is my at the moment my favorite or my preferred scenario, that we see maybe a market grinding slightly just above this level of 1920, seeing some algos and going up for a stop fishing expedition, but then slamming back, and then in that case reconsidering that coming back into on the pullback within this area of 1900 dollars. That will be my ideal scenario, but we'll see what plays out in the market. Okay. All right, so let's look now at a few trades that I took this week. The first stock that we're going to look at was OMI. So Owens came in on Tuesday, 21st of July, and what basically brought my attention was they were moving on basically on pre-earning announcement. The stock when like I want to show you on here on the daily on Tuesday open above, had a breakout, 12-month high breakout. That's basically what immediately brought my attention, but also the fact that if you were looking at the general picture that we had on the weekly. We had a clean breakout with volume, with the news catalyst that was coming along, and strong resistance that was being established anywhere between $13.40 and $14.25, also in convergence with the moving average 200 weekly. So this area for me was the first strong area of resistance that we would meet. So I really liked the way that the market looked in the setup of the trade, so turned it to an entry based on an OPR, an opening breakout on the 5 minutes. So that was the market opened on the gap up on Tuesday and came in at that level. The entry was $10.64. I had a stop of about 60 cents, so 10.04, which was around here. So gave myself a little space below the low of the day and took a first partial profit TP1 at 11.24 on that candle. And I had my second target established right below this first level of resistance here. So my second target was 13 and 32 cents, which I took here. And third target was right below this horizontal resistance. And I was working at 14 and 16 cents, which basically got executed on that candle here. And right now, let's go back to slightly larger units of time. So like the 60 minutes. So obviously we've reached the big levels of resistance that I had established on the weekly and the daily charts. Again, corresponding to these two areas of resistance and moving average 200 weekly. I'm going to be working my last partial following a trailing stop based on a moving average 20 on the 60-minute bar chart. That's basically what I'd be following. We'll see if Monday the market decides to make a new high and break the high from this week above $15.40, or if they're going to basically try to bring it down, form a sort of double top here and test the market to bring it down to this level, or maybe moving average here's 50 on the 60 minutes, around 1250. But anyhow, I will be out if we basically trade below moving average 20. I will be out on this trading stop and reconsider an entry depending on what the market will offer me next week. So that was the one of the trades taken this week. Another trade that attracted my attention was CALX. So CALX was on my list on the basis of a 12-month breakout on the Friday here. So it was on my weekend analysis list, and on Friday we basically managed a 12-month breakout with a high relative volume on that day. So I was looking for some kind of entry on the opening on Monday, and I started basically monitoring the 5 minutes bar chart on Monday the 20th. So let's try to go back to Monday and show you. So that was the opening on Monday. We opened with just enlarge the chart a little bit. Opening on Monday, we opened with a gap up, basically past the high of the session on Friday, which was, definitely a good sign. Then saw the market going back, pulling back to VWAP again a second time, and a convergence of the moving average 50 on the 5 minutes chart. I saw the market immediately curling up on that candle here, that's what I got in. So my entry price was $16.32. I had a stop of about 20 cents there, about just basically the low that we've established on that 5 minutes bar chart. That's where I basically established my first stop. And my first partial was based at 16.52 cents, which happened to be done on that candle. Put my stop at break even and was working then a second partial a bit higher, but I knew that also they were supposed to release their earnings after the close of that day. So decided to basically, I generally don't like to hold so much position to an earning, although the entry was quite good. The stop loss was at break even. The configuration of the market was also I like the setup. So I took out another portion of the trade and left only half the position at the close of Tuesday. And they announced their earnings on Tuesday, and then on Wednesday, the 22nd of July, then the market had a big gap up here. And if you look at the 60 minutes bar chart, that's the gap up that we've had. At this stage, going back to the daily chart, the weekly and daily chart, I'll show you. Since we've had this break around the $14 area and we kept on going up, there is really nothing on the left of the chart apart from around this area, $22.50, $22.97. So anywhere between $22.50, $23. For me, there is no real major resistance, and that's basically why now my next target has been set at $20.35. But I will be working as well since the move has been quite parabolic. I will be working a trailing stop based on moving average 20 on the 60-minute bar chart. Now let's look at the 60 minutes. So that's what I'll be working now. Either we'll hit my target at $20.35 or I'll get stopped out by my moving average 20 60 minutes. And last but not least, the one of the trade I wanted to cover with you guys was trade on AMD. So AMD also was on my list, watch list from the weekend. And what attracted my attention was the 12-month breakout high of above $59.27 that we had on Wednesday, 22nd of July. So if that was the entry that I had here, let's just try to go to see on the 5 minutes bar chart. Going back to the 22nd. So this level 59 and 27, between 59 and 59 and a quarter was an area of heavy resistance. 59 and 27 cents was the 12-month high, and we're seeing on that candle here 10:05 a.m. and we broke the high. So I was looking at the breakout level, got in at 59 and 47 cents on that one. Just put half of the regular size that I put usually because I don't like to play breakout with my full size. I usually like to play a breakout and wait for some kind of either consolidation or pull back towards the breakout area and then fill out the rest of my position. And I was working after my entry a $3 stop at 56 and 47 cents, which was about that level here. around here. Um, didn't manage to basically take a first partial on that day. Let's just basically go back to maybe the 1 hour chart. So I think the high on that day was 62. Let me see. That was 62 and 33 cents. So I was close to it, but never basically managed to get a first partial on that. Then the market basically went back exactly to the area of breakout. Unfortunately, that happened to be on Thursday, where my attention was not really in the market. Anyhow, the market opened very strongly with a gap up on Friday, opened at 64 and 11 cents. I managed to basically get out of my first partial profit at $63.40 in the pre-market on Friday, and then now basically I'm going to be working a trading stop based on moving average 10 on the daily. So let's go back to the daily here. I have my stop that's a break even now. I'm just going to basically follow moving average 10 on the daily as my trading stop. So, guys, that was it for me. That was a kind of like wrap up on this week. Like I said, traded out of not all of my position, but definitely downsized the gold position. We'll see what will happen. I've put silver market also on my watch list, because I think that also now it's a little bit overextended like gold, but if we pass certain less resistance level that we've seen, that we have just ahead of us now, we might see silver outperforming gold, and I'd like to participate in that move. But at the moment, I will wait for some kind of consolidation or pullback before considering getting back into it, or getting into it really, because I didn't play the silver this year. I was playing gold, and so that's it for me. I wish you a happy trading, successful trading for this week to come, and we will talk very soon. All right. Bye, everyone.